Amazingly simple tax-saving strategies. The Rich Do It, Smart Simplified. Taxes aren't the only thing that matters in life. Certainties, they could be your one biggest expense. Most people see taxes as a fixed amount. They'd be stunned to learn that incredible tax code. Opportunities for regular people too. Build wealth by planning efficiently for the future tax. Strategic thinking has strategic implications. Failure to have any type of tax plan. You'll have a tremendous advantage. These are the best and easiest ways to do it. There are many ways to reduce your tax burden. You'll be amazed at the results. These are so simple and cost very little. They will save you money. Smart Simplified will teach people about personal finance, investment and money management. If you're interested in improving your life, financial future, make sure you subscribe. If you find this video helpful, go to the channel and click the like button. Many things are commonly discussed. Benefits of home ownership, but only one. It is a great advantage that many people overlook. You get some incredible tax benefits. Maximizing the tax should be a top priority. Advantages can give you a tremendous boost. Your wealth. When you sell a piece of, it will be subject to property. Capital gains tax means all profits. There are some tax incentives, but they will not be paid. There are exceptions. The IRS allows for an exclusion. You may want to sell your primary residence. Capital gains taxes are exempted. The first $250,000. If you are single, make $500,000 if you're. The main caveat is married filing jointly. The rule is that you must live in your home for at least minimum of 2 years. Imagine if you could be there. You could add $500,000. Are exempt from tax on your wealth, and you. This process can be repeated many times. Doing it twice would result in you being a millionaire. A home that is in dire need of work can be purchased. The most popular way the average family uses is a smartphone. This tax strategy is used. But you don't. You may still have to purchase it if you don't need it. You can work by simply purchasing a property. Market value in a great location. This will allow you to maximize the effectiveness of your efforts. It will enable you to make investments to grow tax-free. Contrary to traditional IRA, contributions to a Roth can be made using dollars that have been taxed already. This means that you won't be charged tax during the contributing year. Deduction. You will continue to pay your taxes as usual. But when you withdraw the funds during retirement, you don't have to pay any extra taxes. Instead of paying federal income taxes, your distributions can be up to 37% off. Everything you need to do in retirement. A retirement is a great option, especially if you have amassed assets. An extensive portfolio will result in a very substantial amount of income. Healthy retirement income that will provide for your needs. You will typically pay a high tax bracket. Roth IRAs are not required. During an emergency, you may be required to withdraw funds. Retirement. Regardless of whether you are a widow or not, it is essential. You can usually put up to 6 people in a room. A Roth is a sum of thousands of dollars each year. Retirement account, and the sooner you get it. Start to finance it more tax-free. You will have income when you retire. Real estate ownership is more than a hobby. It is a significant investment because of its excellent returns. It has a potentially high rate of return. This is also a great investment option. The many tax benefits available. Everyone needs somewhere to call home. Investors are encouraged to contribute by the IRS. These tax incentives can be used to help you buy housing. Renting a property can give you breaks. You can depreciate the property. This means that you are allowed to deduct the value. The IRS considers your taxes as the property's useful life is 27 years. You can divide the time into half years. Value of your building by 27. Divide the amount by half, and subtract that amount from your taxes. For example, if the value $500,000 is the cost of the building, divide that amount by $20. 7.5 and the tax deduction. This equates to more than $18,000 per year. This is a great incentive. Even though the IRS assumes that buildings have a life expectancy of 27 years. It's going to be half a year. It could take much longer. It's important to note that this is not a no-tax deduction. Without following the correct procedure, the taxes may be due at a later date. Adding to the tax benefits associated with owning a home. Rent, property taxes, insurance, management fees, landscaping, pest control. All maintenance costs are subject to tax. Your tax deduction can be increased further. Liability is the mortgage interest that is often a significant expense involved. Owning real estate can also be a considerable investment. Tax deductible. All of these write-off possibilities. Owners of rental properties are often pleased. This income is exempt from taxes. Even though there are many costs, it is still worth the effort. Owning real estate can bring you many benefits. Eliminate your tax burden during a specific calendar year without following. If you are unsure, follow the correct procedure. You might be responsible for selling. These taxes are subject to tax deductions. You don't get free money just because you have it. There are only a few ways to lower your expenses. If you are an employee, there is no tax burden. Starting your own business allows you to make your mark. You have many other options. I would never have worked for anyone else. Other employees make more than their taxes. Immediately taken from their check. The rest is used to pay the bills. Business owners enjoy greater flexibility. Sometimes, you can do things differently. Different order. As a business owner, you can earn an income. Money pays bills, and tax is paid on the profit that remains after you have paid expenses. For example, a business owner might use their car for work. Many of the running expenses. The total, including the back and forth to work. The cost could be similar, but they are not. The client can often write these expenses off taxes, paying little to no income taxes compared to someone who receives a 2-weekly check. They could be paying a high price. A percentage of their income is subject to tax. The capital gains rate for the year is 0%. Single filers earning up to approximately $41,000 for married couples filing. Earn up to $83,000 together. This means that those who are planning on retirement on portfolio income, long-term assets to be sold, capital gains or qualified dividends, they won't be paid any federal income if they earn it. These brackets are exempt from tax. In other words, profiting long-term, capital gains or qualified dividends. These tax brackets may result in tax-free income. For those who want to retire early, before their retirement accounts can be tapped without penalty for those who are eligible, receive a high percentage of their. This is how you can earn income from your brokerage account. Great news, long-term capital gains and taxes are not included. Subject to a significantly lower tax. The rate is higher than the average income from a retirement plan or 401k. Traditional IRA. This means that investors can make a lot of money. Incentives to invest in long-term capital gains. A typical example of long-term capital is REIT. Owning stock in a company is a way to gain brokerage account for more than 1 year. This would lead to the preferential tax treatment. This strategy is popular with the wealthy people use. When someone builds wealth, they buy appreciating assets such as real estate, stocks, collector's items and other items. Value stocks can be redeemed through real estate. Dividends are paid, but a large portion of the profit is not resulted from the asset value increasing year. But how do you get that after a year? These assets can be sold to make equity. Being subject to tax. Instead of selling, put the cash in a savings account that pays little. Wealthy individuals are not likely to be interested. These assets can be used to borrow against them. A larger mortgage can increase the value of your home. Out on their real estate and borrowing against their stocks and other. The wealthy can invest in real estate, has seen an increase in value. They can be taken into account for a substantial amount of value. You can take out a loan to pay it off for spending money instead of selling, since taxes are payable. This is considered a tax upon the sale. A well-planned strategy. Further, assets can be passed on to others. Their heirs are given on a stepped-up basis, which means that the heir decides to sell the asset. Capital gains taxes are only applicable to the difference in value between the dates they were taken. It was received and sold. It was possible to hire a certified professional accountant or CPA. Public accountants are a step in the right direction when trying to communicate effectively. Plan for taxes. Online tax preparation is possible. It's tempting because it's free, but there are still costs. There is an underlying cost for filing taxes. Your own when you have very little or no money. Knowledge of tax strategies that work. Compare an online program with a CPA who. You must complete college and pass an examination. This ensures that they fully understand the material. The tax code to ensure they are aware of all aspects. Different tax strategies and rules. A quality CPA is someone who will guide you, and your team will help you make the right decisions all year round regarding different financial moves that can be made in the tax implications. They can assist you in making wise decisions. Plan for your future and be responsible with your money. To help you avoid paying more taxes than necessary. Get the guidance of a qualified professional is crucial. You can ask for many forms of income. Any wealthy person can use a CPA. The answer is yes, a little tax planning can make a big difference in your success. Keep more money in your pocket. Instead of overlooking tax implications, you should completely do research and look for information. A tax professional can help you make the most of your taxes. A remarkable difference. It's so easy. You'll be amazed at how simple it is. Professionals can help you build wealth. Guidance in a well-thought-out tax strategy.